A year ago, I stood up here. We were a new gold producer. We'd been in production for about 6 months. We'd turned the project around. It was actually starting to make money. So we picked this project up, Mineral Hill, in January last year. And it was burning cash. And it took us till April to turn it around. And since April, it has self-funded itself, and it is also now self-funding Kingston as a group. So it's been a fantastic story for us. That little processing plant was built in 1988. We are nearly 5 months through refurbishing the crushing, grinding and float circuit. That will get recommissioned early next year, so we'll go into a bit of detail on that. So where do we sit? We sit in this, what we call the Cobar Basin, the southern end of the Cobar Basin. We think this is a strategic location in terms of the plant, the approvals and the people that we have. And I'm going to talk a lot about our people because I'm very proud of what they've achieved and what they've delivered for Kingston shareholders, despite the share price. We all know that it's a tough time in the market, but our focus on cash and focus on mine life continues to deliver the dividends and will pay off for shareholders. So we are producing gold and silver. We've got the right management team. We are very much gold and copper people. You're not going to see us pivot into other hot commodities at the moment. We're very focused on what we know and what we can do. We're very well positioned in New South Wales. We only have 2 ELs, which I think is actually a real advantage, and we don't have half the state under tenure because we don't need to. We think we've got the right 2 ELs. We are growing. Our production last year was 16,000 ounces. We're aiming to do just over 20,000 ounces this financial year, and then push that up another 50% to over 30,000 ounces in financial year 2025. So we are small, but it's all about cash generation for us. Extensive infrastructure. Again, I'm going to talk about this a lot more. We own 100% of this project. We also own 100% of Misima Gold Project. And if you want leverage to gold, then come and talk to us about Misima. And we got a well-funded. Last quarter, we completed a capital raising, so we're in a very strong position to deliver this growth plan from Mineral Hill. So the board and management, Mick, he was the Managing Director of Oceana Gold. A lot of you guys would know him. He has built 4 gold and copper mines in his career. I'm a mining engineer as well from Western Australia, but I also did 6 years as a fund manager, so I am very focused on cash. In fact, I annoy the accountants. I don't want to hear about P&Ls and EBITDAs. I want to know cash. So that's my focus. Tony Wiebe, also an accountant. He was the chair of AMI when they built Hera. So we've got a lot of Cobar experience. And Stu Reckner, geologist and lawyer based in Melbourne, and he was the original executive director of Kingston when we started it in 2016. So our strategy is very simple. We are focused on Mineral Hill and Misima. These are our 2 value levers we have today. We want to grow the mine life at Mineral Hill, grow the production, grow the cash generation, while we find a strategic partner to help advance Misima. Misima will get rebuilt. It is an amazing project that has produced 4 million ounces. It's just a matter of when we can do that and who we can do that with. So our strategy, obviously, grow production. Huge step up from financial year 22 to 23, and you'll see that step up again at Mineral Hill. But more importantly, we paid $23 million for this project, and it delivered $17 million of operating or EBITDA cash flow in financial year 23. So $44 million in sales and $17 million of operating cash flow. That's a great position to be in for an asset that we paid $23 million for. You'll see it continue for the next financial year. We haven't guided, we're too small to provide guidance, but we expect to grow both the top line and the cash flow. We've got 2 ELs. As I said earlier, we are exploring. We have drilled holes in both MLs and ELs in the last quarter, and we'll update the market on those in due course. Misima, we talked about that. We own 100% of that project. We took that from a joint venture in 2017 to 100%. We've got a 20-year mine life, 1.7 million ounces of reserves and 3.8 million ounces of resources. It's a great project. Quick snapshot, you can see where we are. We've got cash of 18 million. We do have some debt. That's from pure asset management. That's to help with the funding on the refurbishment of the project. We are cheap at 38 million market cap. You can do the maths on our EV, considering we delivered $17 million of cash flow last year, operating cash flow, and that is growing. So that's Mineral Hill. That CIL was built in 2016 and only operated for 9 months. That is what we're using today to produce from the tailings project. Tailings projects are not for everybody, but we're demonstrating to the market that if you self-manage and self-perform, you can make cash from these assets. So a little bit more detail, you can see where we sit down here. This is the southern end of Cobar Basin. We've got the two ELs. We are one of the only operating plants with the CIL and polymetallic float circuit in the region. The other one is up here with Peak. And what does that mean? We can handle copper, lead, zinc and gold projects. So it's a multi-purpose plant, and that's one of our number one strategic levers. The other problem we've had is growing the reserves. That's going to change. We are about to commence an underground drilling program that will add considerably to our reserve base. We have 800,000 ounces in resources, and that's recovered. 40% gold, 40% copper. So we will grow the reserve base over the next 12 months. And I think the market's looking for that, and we'll announce when we're starting to drill, but underground drilling will be next quarter. So we're in a great position from that point of view. The other thing I want to point out is, is the town of Condobolin sits down here. That's where our workforce live and operate out of. We are not FIFO, and that's one of our strategic advantages. Fly in, fly out costs at the moment are crippling the industry, and so we are own mining, so that's also crippling the industry when you're going to contractors. So we're very focused on the margin staying with Kingston shareholders and not contractors and consultants. So our growth strategy, we've basically finished phase one. That's producing from the tailings project and making cash. We're moving to phase two, getting the plant back online and doubling our production to 35,000 ounces. And obviously we are continuing to work on phase three, which is organic growth. Our project is approved for 700,000 tonnes per annum. So by just growing our float and our crushing and grinding circuit to 700,000 tonnes per annum, we've got our own organic growth strategy. And obviously we want to keep growing around the region. Top line ounce production of 50,000 plus ounces is not actually our priority. Our priority is increasing our cash flow and our cash generation. So where do we, this is pretty interesting. Our project has a footprint of about 2 kilometres. It's tiny. It has a very small environmental bond, which by the way, we have 100% cash backed. So our $18 million of cash does not include our $7.3 million, which is backing our environmental bond. That's a unique position in Cobar Basin. Majority of our peers have theirs debt funded. So you can see here, this is the project. It's pretty small. We are producing from this tailings dam at the moment and basically pumping that on to the tailings dam number 1. And then we will rebuild this first tailings dam for the future production. So we've got our tailings, we've got our mining licenses, we've got our water, we've got our cyanide. All of those things are risks that investors don't have to be concerned about with Mineral Hill. You can see the red dots. They're either mines that have produced from, or have resources, or have reserves for us at the moment. We've got a number of targets, being the green dots that we're focusing on in terms of drilling and bringing into that mine plan and that approvals. So where we sit today is cash generation from the tailings project. We are refurbishing the plant. We are self-managing that. Our process manager is moving out of his process manager role to project manager for the plant. And we have subcontractors that we manage and look after ourselves for the work that we can't do. So again, it's coming back to that self-manage, self-perform. We need to be in charge of the budget, the timeline and the risks for the refurbishment of the plant. Underground re-accessing. I was underground on last Monday with the team. We're already 4 levels down into the underground, and all we're doing there is bolting and meshing and getting it safe for re-entry, and we're pumping. Our aim is to have that drill rig in there for 5 to 6 months, basically starting next quarter. Open pit production. I'll talk to you about Pierce and Pierce North and South. They're 2 high-grade open pits which will come online after the tailings, and then the underground production commences. You can see our board and management there on site. That's also very important. Our board is actually across the details, which is really, I think, where investors need to do their DD. You've got to have an engaged team. So there's our growth strategy. Financial year 24, as I said, about 20,000 ounces. We stepped that up in financial year 25, but most importantly, the polymetallic underground comes online. So think about this. Christmas this year, we'll restart the plant and the open pits start. Next Christmas, the underground starts, at which point copper production comes. So we're about 18 months away from producing copper. Mineral Hill used to produce copper con, lead con and zinc con and has done that for 15 years. So we like brownfields projects. Misima's the brownfields project as well. Then financial year 26, it steps up again in terms of our production and most importantly our cash flow. So the little tailings project that works. Very proud of what the team's done here. We are owner mining this. You can see the increase in quarterly production there. So we're sort of sitting at that 4,500 ounces a quarter at around 1,500 to 1,600 all in sustaining. So making really good cash. That's what you should expect for the tailings project for the rest of the next 12 months. It finishes about the middle of next year. Then we get into the Pierce open pits. These are about 4.4 gold equivalent grams per tonne, so there's a huge silver credit with these, so these are going to be really exciting. Again, nice high grade, nice intersections. These unfortunately only run for a year. We would love to find a couple more of these, and this is one of our priorities, to look for repeats of the Pierce system. Then we get into the underground. What's important here is these declines are all in place. These aren't designs, these aren't planned to be mined, they all exist. We're going to focus right now on the southern ore zone, which is just under 4 million tonnes of, obviously you can see various grades. It's a polymetallic ore body, not dissimilar to Federations and the Heras and the other ore bodies in the region. Nice high grade intersections and widths here. So average stoping width is 9 to 10 metres underground here. It's a very typical long hole open stope ore body. Then we get onto the yellow stars. Now this is our mining licence, you can see here in the middle, very small footprint, and this is our first EL. Not even going to get onto our second EL today because we haven't got the time. But these stars represent our 15 targets. The red lines you can see there are known ore bodies that, as I said earlier, have either produced or in reserves today. Now, I'm pretty confident one of those yellow stars is going to come in because there's already 6 ore bodies, there's a lot of smoke, there's a lot of interesting targets at Mineral Hill. It just hasn't had the attention or the priority before. Misima. Misima is a massive gold project for Kingston. It is potentially a company maker. Unfortunately, at 40 million market cap, we're not even going to try and build this on our own. So we're looking for a partner. What's important about Misima is it's a brownfield project, operated for 15 years and produced 4 million ounces. It was a low-grade open pit ore body in the 90s. It's a low-grade open pit ore body now. I'm so confident that it will progress this project that I'd like to be doing it myself, but I'm not at all going to be asking shareholders to be funding a $400+ million capital from a 40 million market cap. Where is Misima? Sits here. About 20,000 people on the island. It's produced gold for over 150 years and it will continue to produce gold as we progress this project. We completed the DFS last year right in the heart of the inflation, and it was not pleasant repricing that project at that point, but it had to be done. We were on a timeline. As I said, we said we were doing the DFS to shareholders, so we continued to advance that project. Most importantly, we were 49% of this. We're now 100%. It's unencumbered with no royalties. It's perfect for a larger company to come in and joint venture with Kingston. So what do we got? 20-year mine life, of which 15 years are already in reserves at about 140, 150,000 ounces per annum, plus a nice silver credit. So in summary, we're an experienced management team in gold and copper. That is our focus and will remain our focus. We're currently producing. The tailings project goes to about the middle of next year, then the open pit comes on for about a year, just over a year, then the underground kicks in. Our current mine life is out to 27, 28. So this is a project that when we picked it up had 20 months of mine life. So we're already out at 5 to 6 years and you should expect that to continue. Currently exploring and drilling, so look out for those results that are coming. Strategic location, yes, we are looking at what is around us. There are stranded resources and assets that naturally will come to Mineral Hill in due course. So that's pretty exciting as well. And we're well funded.